Welcome, everyone. I am Milan Parek, Senior Director of Investments here at Equity Multiple. I am joined by Michael Sabag and Mark Sabag with Ultimate Realty, a proven sponsor on our platform, who are joining us today to talk about our latest investment, the PODS industrial portfolio, a 150,000 square foot, three-building portfolio in Tampa, Florida. So thank you guys for spending some time today to, tell us why you love this deal.
Sure. Thanks for having us.
So as previously noted, Ultimate Realty has sponsored several deals in our platform. The latest is the last mile industrial facility we did in Orlando earlier this year. Mark, Mike, maybe before we jump into pods, you can kind of give a brief update on that transaction and how it's going now.
Sure. So, Millen, again, thanks for having us, and it's glad to be joining the Equity Multiple team again on a new transaction. On the last deal we did out in Orlando, West Amelia Street, as everyone knows, we structured a 2-year lease with a 1-year option at market for the main tenant that occupies 35,000 feet. That lease rolls in May of 2025, and then the tenant will have an option to renew at market, which is substantially higher. We have 8 months, so we'll know 8 months in advance if they're going to renew. If not, we'll start marketing the space by then. In addition, we had Southeast Steel that has a termination on half of their space at the end of January. So we reached out to the tenant. We said, look, you're occupying two of the 10,000 square foot bays. Let's make the lease coterminous, and we'll structure a new 18-month lease. So this puts us in a position to potentially turn the entire building at the same time and get a premium for one 55,000 square foot tenant. And if not, we don't have a staggered lease term with Southeast Steel. That lease has been drafted. It's over to the tenant, and we expect that to be executed by the tenant within the next week or two. So that's where we are with the investment. In addition, we do have additional office space on the second level that we did not underwrite any income for. We believe that's probably worth $2,500 to $3,000 a month. You'll need between $30,000 and $40,000 in base building work to bring that space to life and activate it. So in 2023, we will probably undertake that office renovation and add another few $1,000s to the bottom line. But otherwise, the market and fundamentals continue to remain strong. Space is at historical lows in terms of vacancy, and we feel pretty good with the asset.
Yeah, it's great. And just to kind of remind everyone that was a sale leaseback transaction with the major tenant at a below market lease, right? So the opportunity there is the mark to market rent play. And I think it's probably great news that tenant is continuing to pay rent, but the sooner where that person stands, I think the quicker you guys can realize that business plan, right?
Yeah, that's correct. And in addition to the lease being under market, as you'll find out soon about the PODS deal, we're really buyers. We're a basis buyer, so we're looking at construction costs, we're looking at replacement value, and it's not just the lease. Because if a tenant did blow out, what do you have to release that space for? So if we can be in below replacement cost with solid fundamentals, that makes us feel really good at night.
Absolutely, and probably a great segue for this current transaction, with the portfolio in Tampa. Do you mind maybe telling us how you guys found that transaction and what you guys found attractive with this play?
Yeah. So we have a broker that we actually purchased a building in Manhattan from a brokerage shop based out of New York, and they're strictly cold calling different owners and sellers really across the country. But we linked up with one specific broker who's been looking at the west side of Florida exclusively for us, and we get that first call if there's ever an off-market opportunity. we have a good concentration of industrial product down in Orlando. As you know, we have a couple of properties there, but we're seeing really strong growth, especially from an influx of residents over the country move to Tampa and Pinellas. So we've been studying that market. We got a call from a broker who um, stumbled upon an ownership based in Kansas City, single family home builders actually in Kansas City. This is their only properties in Florida. And they said, look, we've been getting 1 to 2 calls a week for these properties over the past 3 years. The sellers don't need the money. Um, they can use it at this point in time. It's a third generation real estate family, and they're in the home building business. So we have a good understanding that they need capital and want to drum up liquidity. And they did not negotiate with us. We don't think they're so in tune with the market and cap rates and price per foot, et cetera. And they said $17.25 million is the taking price, and otherwise we just won't sell them. So we scrubbed the numbers. We spoke with, local brokerage shops, Cushman and Wakefield in specific on the capital markets and the leasing side, who really confirmed all our projections. And we moved forward with the deal. And we flew down. We inspected the property. We brought our construction team out there and executed a contract in, I would say, 7 to 10 days.
And just to provide some additional context as it relates to all things Florida and Ultimate Realty, Tampa's been a market that we've been studying for the better part of the last 2 years or so. We know when something feels right and it's a good deal. From the time that we got the call from the broker until the time the deal was in contract was probably no longer than a week or 10 days. We knew it was a good one from the first minute. Again, really because of our understanding of the local market, having been involved with it and other transactions. Not that we've closed anything in Tampa, because we haven't found any opportunities that seemed interesting enough to us. But by studying this particular market for the better part of the last 2 years, you get a sense to what is a good deal and what isn't. And we were really excited about it from before it even started.
Yeah, no, I mean, I think that's a good, good point, right? This is not your first rodeo in Florida. Maybe you can talk about, even at the ask price for the seller, why that was interesting from a price per square foot perspective, and where, especially in relation to where the rents are at with this tenant.
Sure. So just very high level. Some deals are more complex than others. This one I'd consider pretty straightforward. There's a single tenant that occupies the buildings and they're paying X amount of dollars in rent, and we're buying the buildings for about $110 a square foot, right? So we usually parse out the two different conversations, both as it relates to the basis and the dollar per square foot, as well as the going in cash flow and what we expect those cash flows to be when those leases turn. So as it relates to dollar per square foot and the basis at $110 a foot, that's a win right there. You can't buy anything in Tampa, let alone a 36-foot clear height building of this magnitude, of this size, of this girth in Florida, really anywhere, let alone in Tampa, one of the best submarkets in all of Florida. So we were really excited, and we still are very excited about the basis per foot, even given all the turmoil that's happening right now throughout the country, and obviously to a lesser extent in the Southeast. And then secondly, as it relates to just the going in cap rate, we're buying it at about a 5.4 cap going in unlevered cash flow, and we think that the market rents are about 30% below market. Even before we called the local brokers to get a better understanding of the market, we felt really comfortable with the $9 rent of where the market rents are today. Obviously, we had those numbers confirmed. We reviewed various comps to support that. But overall,
on a blended basis.
On a blended basis, going in at a 5.4 cap with market rents about 30% below market, getting into around an 8 cap. Those kind of numbers are really exciting given the risk-adjusted return with just a lease-up play. There's very limited amount of construction here, and there aren't that many variables as it relates to moving pieces in the business plan.
Yeah, so I think one thing that can be overlooked here is just the quality of the buildings. With a national tenant, and you mentioned 36-foot clear heights. What else kind of can you speak to for the the high quality of the building, and ultimately the why it's attractive to not just PODS but other potential tenants?
Yeah. So in terms of the physical aspects of the building in Pinellas, we've got a 100,000-foot building, tilt up, concrete construction, built in 2007, so fairly recent. A lot of the buildings in that market are vintage 1980s, so better construction than most of the competition, at least in the local area. The building itself has 38-foot clear heights in Pinellas, and over in East Tampa, we're at 36. The buildings are climate controlled. They're not fully conditioned, but they are climate controlled. PODS has a requirement to make sure that they are conditioned to a certain extent because they're storing people's belongings. The site is very well maintained, as you'll see throughout some pictures, and we have a property condition report that confirms all of this. We also brought out our construction team to verify these aspects on both different sites. And further to that, we have linked up with the Colliers team, who has been doing the property management for the current seller, and confirmed that there are really no immediate or structural repairs needed to the building, and they are familiar with the building over the past 12 years. In terms of the other aspects of the building, there are a bunch of drive-in doors in Pinellas, large drive-in doors that are all in great condition. There's two different areas of office space that have been retrofitted recently and are very functional. There are large ceiling fans within the buildings, and the site work has been maintained over the years. That's on the Pinellas building. On the Mazzaro buildings, they are block construction up to 9 feet, and then they are metal buildings. Not as good construction as Pinellas, but built in 2004, so fairly recent, in great shape. We've inspected the roofs as well, which don't need any repair, and also climate controlled in those buildings as well. So in terms of the physical aspects of the building, they're in solid condition.
Yeah, and I think one other thing to point out is that if someone's looking to go buy an existing building, you're either going to buy one of two different types of products. You're either going to buy a Class B or Class C building, which typically do not have clear heights that exceed 25 feet, or you can buy a Class A facility that's north of 35 foot clear heights. What's interesting about this building is that while built in 2004, which is obviously fairly recent, it does have 36-foot clear heights, and when you compare that to what replacement costs are today, at again about $110 blended a foot, which is where we're buying it at, it's got to be at least 30% below replacement costs. So that's really exciting to us. Really as it relates to anything that's coming online today that we know about, or anything thereafter in the future, but you can't build it, buy the land, build it for a minimum of 150 to or north of $150 a foot.
Yeah, one thing we should take note of on the clear heights, specifically in Pinellas, if you look around at the neighboring buildings, none of them are 38, 40-foot clear heights. They're all generally 20 to 25-foot clear heights. That was because when they built these buildings, local developer built in for PODS 2007 and 2004, they got a variance for the clear height, which is grandfathered in. So if you did have a tenant that was racking that high or needed for light assembly use, there are very few buildings that a competitor can go to get those ceiling heights.
Unless they went to a new construction building, which is easily a 30% premium on the rent.
Yeah, and still they're not typically built with 36 or 38-foot clear heights. They're 30, maybe 35.
So no doubt, the building, I think is a new construction property that speaks well to the market. PODS is a strong tenant, But with that, why don't you walk us through your business plan and how you're approaching the re-tenanting of the space, post acquisition?
Sure. So post acquisition, obviously, we always keep in tune with the market, tenants in the market, who's signing leases, what's being built, tracking vacancy month over month. And what we would do is just go to the market around January 2024. We'll probably work with Jessica Mizrahi, who's the lead Cushman broker out in Tampa. We've comped the buildings with her and have been studying it for quite a while. And we look to lease them, just like our business plan calls for. Aside from PODS, aside from banking on any renewal, we'd get marketing materials together. We'd get this out to a select few groups maybe before January, or a couple of the lead brokers in the market. And then we would go live with this, set up property tours, whether it's for, the 3 building portfolio or individual buildings on Masereau, distribution tenants, like manufacturing tenants, really anyone that's in the market. But we would make sure that the brokerage community knows about it, by January 24, and that these properties are widely marketed. And during that period, if PODS comes to us with a renewal, we'll certainly listen, and we'll look to make a deal with them. But it's almost irrelevant to our business plan, and we need to stay on the conservative approach and assume that we're going to lease these buildings up while spending the $1.25 million in leasing commissions, TI, LC, and any base building capex.
One other small point that allows us a little bit of flexibility upon the lease-up period is that we currently have, as everybody knows, 3 individual buildings, approximately 100,000 square feet, 35,000 square feet, and 15,000 square feet, totaling about 150. What's interesting about the 100,000 square foot building in Pinellas Park is that the building is actually broken out into 3 individual units. Although it's one structure, there are walls that divide the building up into 3 individual units, all approximately 30-ish thousand square feet. So if we wanted to have a multi-tenant building in the Pinellas Park building, which wouldn't be the best and highest use, but it would be an option if we wanted to chop it up a little bit and get a premium on rent, we can do that. But we are looking to lease it to one tenant for 100,000 square feet, really find credit for that, because there are not as many 100,000 square foot availabilities in the market like there are 30,000 square foot buildings. So the uniqueness factor sometimes allows you to charge a premium on rent because you just can't find it.
Yep. And in terms of the bucket of money, we're holding $1.25 million, which would go towards leasing commissions, any base building capex work, maybe some site work, tenant improvements, which would include recarpeting, repainting the office areas, some lighting for the warehouses that would be updated, and any other minor improvements along those lines. So that would all be a savings to the bottom line if we were to renew the tenant.
Right. I think also worth noting, maybe we can talk about the financing a little bit, but that we've kind of arranged for that additional funding to come from the lender, as those needs arise, right?
Correct. That's a future funding facility. Good news.
Yeah. So, just on the debt, right? It's a balance sheet lender, repeat lender for you guys. I think it's important in this environment, right, where we're seeing obviously rising interest rates, retrades from various lenders. I think we're quite insulated here. We obviously have a signed term sheet. We're exploring, a rate cap if we need it. But best, I guess, first and foremost, we have a lending partner that we've all worked with previously, and we know will perform as expected.
Yep. So not sure if everyone knows, but Ackman Ziff, based out of New York, is representing us on the debt. We're working with RRA Capital to provide the balance sheet loan to us. Repeat lender, we've put out about $40 million in debt with the firm over the past 16 months, past few transactions. Great lender to work with. This is actually coming from a separately managed account. They work with Copper Point Insurance. So this is a balance sheet loan. When we went to the market and we looked for this bridge financing, we got back quotes of between 100 and 200 bips wider than this pricing, and that's mostly because those are CLO lenders, where they'll go ahead and sell the paper on the secondary market thereafter. This is, balance sheet, managed by RRA. So if there are any adjustments or anything that we need to work out with them, they have full control, and it's not going to be collateralized.
Yeah, we're really excited about the RRA terms that they provided. So it's a 3-year term with 2 6-month extension options. But what we're even more excited is because it's only 12 months of minimum interest. So should we be successful with renewing PODS a little bit earlier, we could look to refinance or sell the property within 12 months. So that's really exciting. Typically, you'll have minimum interest of 2 or 3 years, but here it's only 12 months. So we're really excited about that.
Yeah, no, absolutely. I think the flexibility is key. One thing we didn't touch on is leverage either, right? I think, as good stewards of capital, we've chosen to go with moderate leverage here, which I think is the right play given the, binary aspect of the lease. Instead of maybe pursuing more expensive, higher leverage bridge financing, which, maybe helps your equity going in, but creates for a lot more risk, during the whole period.
Yeah, just in general, as a philosophy of the Ultimate Realty brand, I can't remember the last time we ever took more than 65% financing on anything, and it doesn't necessarily correlate with what's happening in the given markets. It's really just a matter of risk tolerance and what we allow for. When we see a deal that we like, by example here, this PODS opportunity, sure, if you took out more financing on paper, the returns would be a lot more accretive, but the deal's good enough, and we're very comfortable with the approximately 62% financing on the total capitalization that we have in place right now. We're comfortable with it, and we can put on more debt if we wanted to, but just given the moving pieces, especially given everything going on in the capital markets, something we elected not to do, and we have a decent amount of equity behind this transaction, so we feel pretty confident overall as it relates to the capital stack.
Yeah, exactly. And so, I think we've talked about the attractive mark-to-market play with the in-place rents compared to market, the tendency of PODS, the functionality of the building. Clearly there's some rollover risk. What other risk do you see in the deal, and, and how are you guys approaching that or mitigating those factors?
One thing that's always on our mind, buying real estate in the Southeast, specifically in Florida and West Tampa, is natural disasters. Obviously, you can't account for it. The only thing you could do is protect yourself by buying property insurance and buying wind insurance along with it, which we're doing here. Additionally, we've looked at the last 10 years worth of capital improvements and maintenance that were done at the buildings. That had no water, no leaks, no floods of any major significance. So during Hurricane Ian, the buildings were fine, but that's something that we're always very cognizant of.
Well, thank you, gentlemen. I think we covered a lot today. Talking about this transaction and why we think it's an attractive risk-adjusted opportunity for investors. Before we part, is there anything else you want to add before we sign off?
One more thing, Millen, as it relates to capital markets, because I just think it's on everybody's minds today. Where are capital markets? How does this affect the investment, et cetera? The reason we like the opportunity is because if we're buying something at a projected 8% unlevered yield on cost, that's pretty freaking strong with a credit tenant, because these buildings are going to demand credit tenancy, and we wouldn't sign anyway if it wasn't credit. So we're excited about that. Overall, just looking at an unlevered yield on cost at somewhere around an 8 cap, which is where we're going to land, you can't find that today. That's just the reality. And further to that, are we scared? Are we nervous about being able to produce the projected rents that we're talking about here, Florida is one of the best markets in the country. And from our portfolio that we have in place right now, Florida is the best performing state and out of anything that we have. And you just can't find anything. So if you're a tenant in the marketplace looking for space today, reality is you're not going to find what you're looking for. Maybe you'll find something else, but you can't find what you're looking for. And you're not seeing products sit on the market for too long. Now, that's not necessarily a statement that I'm going to make as a blanket statement across the entire country or even across the Southeast, but specifically in Tampa, the market fundamentals are super strong. There's very little available today. You definitely can't find 100,000 square feet if you look in the market today, and especially not at these rents. So, we're not assuming any significant market growth that's that we're nervous about. Over the last couple of years, they've had the double-digit market rent growth, and we see really no reason why that should not continue, which would obviously put us in excess of what we originally underwrote. So,
yeah, I think you hit the nail on the head, right? I mean, if there's one thing investors should take away from this, it's we are stabilizing at as you said, approximately 8% unlevered yield, where cap rates today are probably mid fives. We're maybe even lower. We're underwriting a 6 exit, which is a 200 basis point spread. So, A, I think we all think we're going to outperform that. B, even if things do get worse, there's significant cushion there that still allow this to be a better than average or better than break even investment. Like, your downside is really limited here.
Yeah, look, I mean, the reality is right now the economic climate is not, is not great. Absolutely not. This, I think, this particular deal is an isolation of everything going on in the market right now. And I think, Millen, you put it best. I mean, we're building something to about an 8% unlevered yield on cost. Even everything going on in the financial market, specifically as it relates to the cost of debt, an 8% unlevered yield on cost is pretty attractive.
All right, gentlemen. Anything else? I think we've covered it, but anything else you guys want to add?
No, not in particular, but we're looking forward to another successful deal with Equity Multiple. Glad we can have you guys on board and doing another deal in Florida, in a robust and really strong market of Florida.
Yeah, I'll echo the same comments as Michael and the same sentiment. But really, when Michael and I look back at the successes and failures, not too many failures, but successes of Ultimate Realty that we've had just in general, what we've seen is tailwinds is something you can't account for. And when you have strong tailwinds, it makes doing business a lot easier. And we think Florida and its growth potential is something really you can't account for on paper, and just a place that a lot of people want to invest and live in. So we're really excited about doing another deal in the Florida marketplace, and we think there'll be some really strong tailwinds going forward into 2023.
Great. Well, thank you, Michael and Mark, for taking some time today. If investors have any follow-up questions, please feel free to reach out to our investor relations